European equity markets were weaker overnight after a little bit of scepticism that Europe's plans to help stabilise Greece may be derailed. Over in the US, markets did lift later on in the day after better than expected sales data and reassurances from the European Central Bank chief that Greece will not default on its debt. This came out during their monthly meeting on their benchmark interest rates. The ECB have left their benchmark interest rate at an all-time low of 1%. Over in the UK, they have also left their rate unchanged at 0.5%. Showing the differences in economic fortunes, Australia lifted their benchmark interest rate to 4% earlier on this week. On the currency front, the New Zealand dollar is little changed overnight, trading at 70.6 against the US on Friday morning. There has been plenty of trading activity for futures on the Chicago Mercantile Exchange for both beef and pork through the month of March. Trading volumes are up 11% through that month alone. In general, hog futures are on a pretty good run this year, up 29% since January, up to almost a 13-year high. Overnight, futures did edge off just slightly as weather forecasts indicate some warmer weather coming through the US, and this should be positive for production. Over the past few months, the cold winter has really affected production, and this has probably brought speculators in to try and lock in prices down the track. It does seem like speculators are taking a longer-term view, estimating that the gradual contraction in the beef and pork herds will continue down the track. There does seem to be a little bit of a lag in the international pork prices, and those prices being offered by processors here in New Zealand. In general, we do see a fairly weak time through Easter. However, prices do take up to a month before they stabilise once again. International pork prices are fairly competitive here in the New Zealand market, given the weak US dollar against our own New Zealand dollar. This has seen domestic prices fall recently. However, farmers are enjoying slightly better margins given that feed input prices are also down at the moment. This includes soy prices. Given higher international pork prices, it would not be surprising to see a slight lift in domestic prices through the medium term.